All right. Good morning, good afternoon to you all. How is everyone doing?
Good morning, Vivet.
Morning, morning. How was this week?
Uh, Vivek, can you describe how the tariff is affecting your life?
It has not affected yet, but I guess after 90 days we'll get to know once the tariffs start to kick in.
Oh,
I,
Vivek, I have a story already.
sure.
Uh, um, on Wednesday night, I mistakenly bought something, but it was with a canceled credit card and incorrect information. But I was unable to cancel it within. Uh, I couldn't reach the retailer until 3 hours afterwards. So then, within 24 hours, this is being sent from China, right?
Hmm.
But so anyways, number one, it's incorrect. My credit card is number two is canceled. So how could they use it? So anyways, yeah. So I might get something, but it was canceled. Anyways,
Right. So, so we were joking among our friends. One of our friends, he ordered for the whole group some stuff that got shipped from China. And then I had collected, some of have collected, few friends have not collected the goods from him yet. So we message on WhatsApp like, hey, now anyone is coming to get the stuff from me, you should charge them 200% more because of tariff. So but I think yeah, I have not seen the impact just yet. It's because the tariff are on pause, but I am expecting that the things will be more expensive than what we currently are paying for. So that's again, we don't know. We don't even know, what's the extent of tariff it will be. So it's everything is up in there. I'll take it as it comes. That's all I can say around the tariff. What else? Yeah, tariff has been eating a lot of. I think there is nothing else being discussed except the tariffs. All the airtime, all the attention has been taken over by these tariff discussions because there is so much of uncertainty. We have no idea how it's gonna be and to what extent it's gonna be. So we'll see. Have you seen any impact? Anyone else have felt any impact around the tariffs? Maybe in your maybe in the companies they might start to prep for tariffs that you might see. As a consumer, I have not yet felt the impact. Anyone else wants to share any story around tariff? Hmm. All right, so what do you have
oh,
for today?
Vivek, sorry. They all shipments mail from Hong Kong in small packages is canceled.
Yeah, so that we know because of that loophole, right? Which they are now trying to close it, and that's another reason. I mean, we are seeing the impact of tariff on the portfolio, right? Not in the real life, but because of that, also some of these discount retailers, right? Super discount retailers like Shein and Temu, they will be impacted because the de minimis rule is on the chopping block now. And I guess that's the reason why I don't know, was it Temu, was it Shane? But one of them has decided to cut back on advertising also. So that's also going to impact, I guess, Meta and other companies. I remember one of the quarters when we were reviewing the results of Meta, one of the quarters Meta had mentioned that what the revenue, they had a huge chunk of revenue growth coming from one of these Chinese retailers, which I guess now won't be there. So that tailwind may not be there. So we should expect to see some fireworks in some of these ad tech companies as well as the companies whose basic model is just advertising. So that I expect to, again, we'll know eventually after 90 days Now I think maybe it's whatever 80 days. What's the net impact of tariff would be, right? Is there going to be a base 10% tariff across all the countries? Sure, I think from market is already priced that in. Is it going to be 20% base? Who knows? Is it going to be 20% base for every except China? We don't know. There's so much of uncertainty. I mean, these are the things that I can't control, right? Neither can you. So why spend so much time? Ramka is saying the deal as it comes is not in our exactly. I mean, we don't control it. Only thing I can control is my portfolio, my position, my cash, how I am putting my portfolio, how I'm constructing my portfolio. That's the things that I can control and I can focus on. What's gonna happen on tariff, I have no idea. I don't think anyone has idea. I don't think that even president has an idea tomorrow what's he gonna do for tariff. It's like he's also thinking on his feet. Get up in the morning. Or which side of the bed did I get up from? Right side? Maybe let's find a country on which we can add more tariff. Anyway. So then what do you think of PDD as a business? So I really have not looked at Pinduoduo uh, from I know the Temu. It's a parent company of Temu, so it will be impacted. But I don't own PDD. I own a little bit of JD and Alibaba, and I think that completes my e-commerce side of the house. But let's look at a PDD in terms of what are we seeing. So let's go to the. It's growing like crazy, that's for sure. How much are the operating margins? Looks to not too bad. This is PDD, right? Yeah, not too bad as a business. The question, now the bigger question will be what are you willing to pay for it? But from business perspective, it's been growing like 30, 40, 50% plus, right? Over, let's say, even if we ignore these 700% growth rate, even over the last few years, it's been growing at decent clip, right? 90%, 60% in 2024, close to 40% in 2022, 60% in 2021. And this is a retailer, and with the retailer having, you know, decent operating margin of 24%. They have done, of course, they had their startup problems. So you see the operating margins were pretty negative, but I think 2022 looks to have turned around the corner, and at least 27% operating margin for a retailer company is pretty good. Even for the net profit margin is 24, 25%. So from business perspective, looks to be a decent one. Uh, they don't kill the shareholders by diluting too much. I think they did in the past, but now they've been like pretty consistent, 1, 2%. That's fine. Um, yeah, company seems to be fine. Now the question is, what are you willing to pay for it? That's a different question. What is trading at? $93. $93. Not too expensive as well. So PDD had earlier, there are some issues which are going with PDD, which is related to their suppliers. There have been revolt of some suppliers against PDD in China because I think PDD wanted to satisfy their international customers, and when, let's say, some customer returns a goods, they basically penalize their suppliers a lot. So I do know, I think I read somewhere a few months ago that there have been the suppliers are agitating against PDD, but at this point of a time doesn't look to be an expensive company. decent valuation, available at decent valuation, and yeah, not too expensive. But like a lot of Chinese companies are available at were available at decent valuation because of the other issue, because it's could be taken over uh, by CCP at any point of a time. So that risk is there. What else? Okay, I see USA sales versus rest of the world. I don't see it here. Like I've not owned this company, so I don't have my own breakup of these numbers. I have no idea in terms of, let's see, by segment. How does this company segments it? Okay, this is merchandise. Yeah, so I don't see it in here. Maybe I don't know if they break it up or not. Maybe it is in their filings. But just what we spent, what, 2-3 minutes? No, this is not a company which I'm gonna just throw it away saying, oh, it's something horribly wrong in this one. It could be on a consideration. Nice growing business, profitable business, decent operating margins, being a retailer, and not too expensive. But it's being a stock that is of Chinese company stock, there are other risks that you need to consider, right? If you're considering investment in that one, which is, what if the stock gets delisted? The business is great, but what if the stock gets delisted? What if CCP, I mean, what if the trade war between US and China intensifies? What does that do to the PDD? Yeah, I think your question is very valid, Maurice. What's the US based sales? I don't know, but that's something you need to look into. How is the tariff will be impacting these things, right? But I mean, there are some companies, I'll tell you, right? When I look at spend these 5 minutes, I'm like, okay, I don't want even to touch this company. PDD doesn't seem to be one of them. So it does deserve further analysis. You can spend a little more time to understand this one. All right, what else?
Can you talk about Trump um, wanting to delist Chinese corporations?
This has been back and forth, I think, over the years. I've heard many times, right, that we want to delist these Chinese companies. We don't want to have, we don't want Americans to basically, help these companies raise capital and all that stuff, right? But I don't think it's gonna be so easy. I mean, early, but this time Trump is not thinking about his billionaire friends or his billionaire donors, so he could do it. There's a lot of U.S. Big billionaires and the hedge funds money in these Chinese companies. Even if it get delisted, it could get delisted from exchanges, but still continue to trade on OTC, right? So that might happen. Again, we don't know.
So,
But this
anyways,
this rhetoric, I've seen it many times before also.
uh, Vivek. So, anyways, about 12 years ago, the U.S. stock exchanges were competing against Hong Kong for IPOs. So, actually, it was Gensler. He was the SEC. So he let them go. They avoid compliance with the stock exchange rules to go IPO. So actually, this is the U.S.'s fault. If they didn't let them in, then it wouldn't have come. You know what I mean?
Yeah, that's right. I mean, there's a money to be made and people will make money. But like that's what I'm saying. This time, Trump is doing something which is hurting his billionaire friends. So I don't know, maybe they'll be more prone to actually delist these things. But I guess those billionaire friends, they'll find a way to invest in it anyway. Is the question is if it gets to OTC, the liquidity might dry up. There will not be any options listed on that one, right? So that could be a concern. It's not that you may not be able to invest, but you may not get the best pricing. In any case, I think even the currently stocks that are listed on a stock exchange, those are not really the stocks of Alibaba operating company in China. right? Those are not the stocks. Let's say if you own PDD, it's not the PDD operating company in China, right? It's because by the laws of exchange, they are not, we can't even list them here because they don't meet the requirement of exchange. And also, I think Chinese government has their own laws which prohibit um, these companies from raising funds from US directly. So I think we talked about it maybe 2 years ago, something like that. So all these Chinese companies have found a roundabout way to, go around these Chinese laws is to go through the route of VIEs, which is variable interest entities. So when I buy a Alibaba share, I'm not buying a share, I'm not in the Alibaba company that operates in China. I'm basically buying an equivalent economical interest, not operating interest, economical interest in a company that is listed in maybe Bahamas, maybe Cayman Islands, maybe BVI, I don't know. So it's a VIE that is listed in some of these jurisdictions, which are then offering the listing the ADRs in US, and I'm buying a stake in that. So even if I, let's say, own 50% of all the ADRs listed in on exchange, I will still not have any operating control on Alibaba as a company. So even these things that are listed in US on doesn't really give US investor an operating control on the company. I can't go and replace the board of PDD if I own 80% of PDD shares that are trading in US exchange. All I own is a stake in a shell company in some of one of these tax shelter islands which has economical stake in the operating company of PDD. That is my understanding of how these companies are able to raise money on US exchanges despite Chinese laws prohibiting it. One
Oh,
day, she could say, all this crap VIE, I want to scrap it. That's going to be a real problem, right? Then I don't even know what might happen. But that
Vivek,
risk we do have. Uh, uh, so even if you're buying, you know, the, let's say even if a hedge fund buys a huge amount on one of these companies in China, they still can't go and do the activist investor stuff, right? What we see in US, they don't have any operating control.
Vivek, 20 years ago, uh, Li Ying or something like that, a top sports brand in China. I thought, why they're in Virgin Islands? Why would they be Virgin Islands? Then China can't collect taxes. That should be illegal.
Yeah. So there are stuff like I talked about this VIE, right? This is not kind of a this is to circumvent the Chinese law of not allowing companies to raise funds, maybe from foreign investors, etc. So they went through this circuitous route of opening an entity in one of these, outside of China, one of these jurisdiction, and then raising money on US exchanges. Is it illegal? I don't know. Could Chinese government shut it down? Maybe. I mean, that's a risk of currently investing in any company in China, right? So you have to be careful with your position sizing. That's why, despite the fact that some of these Chinese companies were the cheapest from a valuation perspective in the portfolio, I just can't make it one of the biggest part of my portfolio, right? There are some risks on which I just can't put any number to it. So, anyway, what else before we jump into today's session? Anything else? Li Ning headquartered Virgin Island. Cool, that's it. Everyone's still doing okay in the markets.
Well, Vivek, it's the perfect time to get things really cheap.
That I don't know it's the perfect time because things that are cheap could get cheaper, but it is better. time than, let's say, what we had in February. Right. It is definitely a better time to buy in the stock market than what we had in, let's say, second week of Feb when the markets were at the top. But that doesn't mean, it may not get cheaper. Who knows? We have no idea. There's so much of an uncertainty around at the macro level, of which no one knows what's going to happen, even though you'll see a lot of commentators coming and talking about it because that's their job. That's how they get paid. Yeah, I mean, I'll be careful. I'm not gonna go, too much out on the limb and say backing up the truck at this price point, right? Wherever the SPY is at, what, 526? SPY is at what? 525? 526, right? So yeah, I'll still be just manage the deltas. All right. So
Vic, one more thing.
yeah.
I sent you a chart. I didn't read the article, but it was comparing Nvidia to Cisco like 30 years ago.
Oh yeah, I mean we have done these comparisons earlier also, right? You'll see that parabolic growth and a narrow parabolic graph. Could it happen? Maybe, right? It's always hindsight is always 2020, right? Looking at that chart, if you could have sold your Nvidia when Nvidia was moved from $20 to $60, right? Oh my God, it's too expensive. I'm talking about post split, right? And then it went from 60 to all the way to what, 140 plus. Now it's back down to close to $100. Right? Could it be the case that it might become a Cisco, wherein at one point of a time Cisco was probably rumored to be the first $1 trillion company, right? It was the most valuable company on the market. And then once the dot-com bust happened, everything went southwards. Could Nvidia be that? If the AI bubble really, I shouldn't call it a bubble yet. We don't even know if it's a bubble until it bursts, right? But if the AI tailwinds don't work out as what everyone thinks it would be, maybe. But Nvidia also is a little different that every year they'll find something, every few years they'll find something new to invest in, right? And they keep reinventing themselves. And that's the beauty of them. Starting from graphic chips to gaming chips to crypto chip to now AI chip. Maybe the next is robotics chip. Who knows? But there's something different in the culture of NVIDIA that after a few years, they'll find they will be at the right time to ride the next wave. Uh, at least I have seen them doing third wave, right? I wasn't following Nvidia as a company, when it started just for a GPU. Yeah, another one, right? When the data analysis, big data became a hype, let's say 2010, 2012, Nvidia was at forefront. And when all the hype around the big data went out the door, then the crypto came in. Nvidia was there. Their chips were being used for mining crypto. And then the AI come in, Nvidia is there. Next one, robotics, humanoids, right? Your self-driving cars, digital twin factories. Cisco probably wasn't able to reinvent themselves. And that shows up in the fact that every time, the world changed, Cisco was a little behind, and then they try to catch up by buying some companies. Every year, I'll hear something Cisco bought XYZ. And I'm like, what are you doing with your previous ones that you bought? They've never been able to grow organically to ride the next wave. It's the growth of, again, I don't own Cisco. I've never owned Cisco. But just by looking at the headlines, I'm like, okay, you bought Splunk. Prior to that, they bought what, App Dynamics or something like that for $4 billion. Then they bought Splunk. And now they have recently they bought some AI. Every time when you see a new uh, hot tech being discussed, you will see Cisco will go and buy it. I mean, at it's only up to a certain level that you can just buy your revenue. You can't just keep adding the new companies. It's not easy to assimilate cultures of the company, people in different company, and if your DNA is not giving you organic growth, I don't know how long can you just sustain by increasing your revenue by buying the companies. And that's one big difference which I find between Nvidia and Cisco. So does the stock chart look comparable that it's Nvidia, Cisco had its run up during the .com, and then it just bottom fell out of it. So currently the stock chart does look like that, but Nvidia is a different company. That's my thought, right? I don't own Cisco. I've not looked into Cisco in terms of the details of it, but you get across these headlines, they bought this. Nvidia also has done some acquisitions, like they bought Mellanox, but those are again bolt-on acquisitions of helping Nvidia in their core business. Cisco is, on the other hand, is just trying to sometimes buying companies which is not even related to the core business. I don't know. That's my concern on Cisco. It might be very cheap as a company, or maybe it also pays, I guess it pays dividend. So PSCO, right? Yeah, it's like a three. So for some value investors, this may be a great play. Okay, but somehow I've never gotten to like Cisco as an investment as a company. All right. Uh, cool. So let's today we're gonna review a couple of earnings. Of course, I'll go through the generally, what happened in the market and stuff like that. And now the earnings season has already started, but most of the airtime is still being taken over by the tariff discussions. So semiconductor earnings are starting to pour in. We had ASML and TSMC, two of the most important companies for the semiconductor space in the world. They reported on in the same week. What are odds? So we'll review their earnings. And I think this week also there was some more news around semiconductor. I think Nvidia took a $5 billion charge because of the tariffs and all that. So Nvidia share tumbled. Yeah, so we'll look at that. I look at some of the market moving news, etc. And like we did last week, then we'll break up into the different breakout rooms to discuss, whatever you guys want to focus on. Let me see, are the breakout rooms still available? Okay, so this is on a recurring basis, which is great. So that's all on today's agenda. Unless you have something else that you want to add. Let me see if there are any questions. All right, I don't see any questions. Cool. Anyone here joining for the first time? All regulars? All right. First timer. Okay. Oh yeah, we have a couple of J's in here. Ruturaj. All right. So do let me know you know what is how did you find this meetup, and what are you looking to get out of this, and what kind of investor you are. I mean, I just want to make sure that this is useful to you guys. All right. Jay, you want to go first? Jay says he's a new investor. All right. So that reminds me, next week, next, I think it's on Sunday. Next Sunday, I'm gonna basically been invited to present concepts around investing for someone. Basically, in our community, we're doing kind of sessions every Sunday. So I have my own session next Sunday to talk about investing 101, starting from very basic. So currently I'm working on that deck. Of course, a lot of our content, I think we have talked about it in one of these sessions. So I was just gonna recycle that content to talk about the very basics of investing. TK says first time option selling investor. Welcome, welcome. Ruturaj says first time. Ruturaj, let me know what kind of investor you are. I'm a new investor. Look for insights for good stocks to invest in. Morris, looking forward to that session. Unfortunately, that is, I'm just a speaker. It's someone else is organizer for that. So I don't think it's um, it's open for everyone. It's for a specific community. All right, so let's get into today's session. As always, I have to go through this. Um, Anything that we discuss here is not a financial investment or tax advice. It's only for your education and maybe a little bit of entertainment if you can find any. I will spend generally every week you spend maybe 2.5 hours talking about stocks, ETFs, crypto, bonds, but don't just go and trade based on whatever you hear. Those are just to, ignite some spark in your mind to see, make you interested in those stocks so that you can go and do, additional study on that one. Okay. All right. Ross says I'm a DJ and former WSB type trader. All right. Okay. So housekeeping first. There will be no meeting next week. I'll be busy. My kid is moving out into, her own place. So I'll need to do my dad duty to basically help her set up all place. So I will be busy over there and won't be able to do the session. So early Saturday morning I'll leave and have to do all that work of, dad, we need to assemble the bed and furniture, whatever she is ordering. I have no idea. So I need to be ready for that one. So no meeting next week. But I'll be back on schedule on oh gosh. So no meeting. Oh, and there will not be any meeting even the week after that. That'll be very long gap. So let me ask you. So 26 definitely I can't meet. Uh, is how about 27th? How many of you can make the 27th? Because a week after that, I'll be in Berkshire Hathaway shareholder meeting. So that weekend is gone. Next Saturday, I'm and I do my dad duty, and the Saturday after that, I am attending. I'm off to Omaha. So maybe I'll figure out if I can do it on Sunday. So maybe that there'll be 2 weeks gap. That's that's pretty long. I don't think we have a 2 weeks gap. Uh, so anyway, I'll see if maybe I can see if I can do something on Sunday. Next week, actually, every Sunday morning I have an engagement. So we'll see. Otherwise, you guys get 2 Saturdays off to do something else. Anyway, so let's look at overall market side. I mean, we still have a volatility, extreme volatility in the markets. Looking at a VIX is still, I guess, above 30, if I recall. Yeah, close to 30 still, right? Which is much higher than the average VIX. What are we going to do? Ramika, what are we going to do? The inmates will run the asylum with the captain. So I could still make it open if you guys. Yeah, that's a good. I mean, I know you said jokingly, Ross, but I could actually leave the Zoom open And if one of you can be the host, just ping me saying you are okay and willing to host the meeting. I'll make you the alternative host. So you guys, you can still go ahead and open the meeting. And yeah, that'll be fine. Yeah, I don't have to be there, but you guys can still meet and talk about whatever you want to. But I need someone to take a responsibility. You know, if the captain is missing, but I still need a proctor. So do let me know if anyone wants to volunteer to host the meeting next week. Just reach out to me, ping me, and I'll make you alternative host. And you guys can still meet next week and the week after that. Unfortunately, I won't be able to. All right, so coming back to the markets, we still have volatile markets. We still don't know what's going to happen with tariff. It's going to be, reciprocal tariff. In fact, there are news coming over the weekend, so I don't know what happened today morning. Things could have changed by, by tomorrow. Who knows? But again, I think there's a lot of uncertainty being driven into the markets just because of the whole tariff situation, right? So we saw tech stocks had a good swings. It again the whole premise was maybe that so last Saturday when we were discussing there were exemptions being granted to the some of the cell phone companies, some semiconductor companies, and then we were talking saying maybe Monday we should see these tech stocks perform better. And then I think over the week, in the middle of the week, we saw the whole market was down. I think SPY was down 2%, QQQ, the tech stock was down. We also had a healthcare stocks that went down after United Healthcare. United Healthcare like fell down what 20% after they issued their profit warning, etc. So we also had a lot of economic news and the data that got released, right? Consumer inflation is 3.6%, which is highest since October 2023, right? Which is a little concerning if you're an investor. It means Fed put up is not gonna be there. Right? So if we were expecting that Fed will come to our rescue, if the White House is killing the markets, maybe Fed will save it, right? With inflation, I mean, these are the expectations, but sometimes inflation is a self fulfilling prophecy. You know, if you expect that the inflation will be higher, you will go out and buy the stuff right now, which is gonna push up the inflation anyway, right? So, uh, retail sales, etc. Consumer, it grew 1.4% month over month because consumers were buying these big ticket items ahead of anticipated tariff hikes. So maybe if you get on autos, if you get 10-20% tariff, that's a big purchase, right? So consumers also looking to buy those maybe moved ahead their purchase. So we saw retail sales went higher. Industrial production that fell down 0.3%. Jobless, initial jobless claims fell by 9,000. So labor market is still okay. So labor market is still resilient. Inflation is still high. That's both the things are not good for not conducive for Fed to basically, loosen their purse. What else I want to look at? ECB. ECB cut its benchmark rate by 0.25%, bringing the mean rate down to 2.25. Whereas on the US side, we are still like 4.25 to 4.5%, right? We're still way higher than where ECB is. And I also heard Jerome Powell, I think he was invited into some economic forum meeting, and everyone was like, "Come on, say the words that we're gonna cut rates or be a little dovish." But nope, he was not. I mean, he was very clear that we're still cautious. Inflation is the direction of inflation is coming down, but it's still higher than where we would like it to be, right? And he says we are cautiously optimistic. he did acknowledge that the tariffs have made, the impact of tariff could be more than what the Fed was planning, Fed thought it would be, because overall the extent and the magnitude of the tariff is so much, nobody expected it to be that, right? But we're not going to act right now. We still want to wait and see the net impact, how it trickles down the economy. So he mentioned it, Fed is likely to remain patient on rate cuts, right? So after that, the market sold off a little bit because we don't have a Fed put, we don't have a Trump put. So who's gonna save the market? Anyway, so that was one big thing on this week was Fed speak. What else? Market is pricing in 4 rate cuts now. Earlier, I think maybe a few weeks earlier, there were 2 rate cuts. Now the market is pricing 4 rate cuts. So 4.25, 4, 3.75, and 3.5. Let's see how much Fed will deliver. But that's anybody's guess. That depends on how the inflation number comes out to be. And I think this will be a fine balance. If you ask me, Jerome Powell is in a tough place, right? They have a dual mandate of maximum employment and price stability. Now, with the tariffs, if inflation goes high, he can't reduce the tax because that is inflationary. But if it starts to break the labor market, inflation goes high, company cut down on their expansion plans or start to retrench labor, and then they'll have to figure out how to now prop up the economy so that we have a maximum employment. Right? So it's a fine balance that you have to do, which we'll see. And I think administration's plan is to get the 10-year down. And if that means it's currently, these tariffs and all that, if that is currently causing some hardship, use a Fed to cut down the interest rates to basically prop up the economy from that side. But Jerome Powell is not having any of that stuff. He's like, I'm not doing it. I'll wait and watch. Right. So, Jay, how do we sign up for Investing 101 meetup? Unfortunately, it's for only for a closed group. You cannot. It's a it's a community which is a closed group community. It's only for the members of that group. I've been invited to talk. Force Ross is saying forcing Fed funds cut and ousting J Powell might have a negative outcome. Bond will dump. Yeah, I mean, if the rest of the world thinks that the administration has become a degen now, yes, then the bonds will dump. It will be, I would say, counter effective what the administration is trying to do. But we have no idea how the world will react. Or these second order reactions is almost impossible to guess. All we can do is figure out what we can do with our portfolio. So given these uncertain times, how can we position our portfolio, right? So while the volatility is never comfortable, unless you are a good option seller, right? The amount of a premium that you can get now is amazing. Like I was talking like last week, right? I rolled out and rolled up both. Basically, it was a diagonal on an SPY call, and I got paid like $5 for it. Wow, I've never seen getting paid so much, you know, except when you see those March or when the VIX or during the August last year, you get paid handsomely for selling options. But volat it's for a normal investor, it's not a comfortable position to be in. You see your swings in a portfolio, week after week, you see such a huge swings, but it is normal part of investing. We have gone through many charts where we looked at, stocks have been like 10% down intra year and still end up positive. Not saying I'm not predicting that's going to happen this year, Right? There have been times when the stocks have been down 10% and maybe closed down 10%. Right? Intra-year decline happened even in the positive year market. So this was a chart I think I've reviewed earlier with a different one, which was I think from JP Morgan, but basically the same data. This is from Morningstar. Right? We have had many intra-year declines. Let me pick up which is the best one. So let's find this. The March 2020, right? The COVID one. The intra-year decline was what, 34%, right? And then eventually we ended 18% plus. 2019, we had a 7% drawdown, but we eventually closed 31% up. Imagine selling your portfolio because we were down 7%. Or coming back here, 2012, we were down 10%, some point of a time in a year, and then we closed up 16%. So intra-year declines happen. Right? We had declines, and there are some years when we declined and we never recovered, like 2008, 49%. We recovered a bit, but still closed at negative 38%. That's our GFCs. We also had 2022. At some point of a time, we were down 25%. And eventually we closed the year at negative 18%. So these declines that we are seeing right now, SPY is down, what, 10%? Yeah, it's around 10.2%. So I don't know. Maybe we'll be down 15%. Maybe we'll come back up. There are some tailwinds that hasn't yet come onto the market. Maybe once we start to get some action on that one, market will recover. Who knows? So I'm not trying to time in and out of the market, not trying to sell right now, saying, oh my gosh, we are down 10%, or I have tech stocks and QQQ is down maybe close to 15%, because we have seen over and over again, time in the market has consistently proven to be a better strategy than trying to time yourself in and out of the market. So in doing that, gonna stay invested. All I can do to manage my portfolio is to figure out what I own. Right? This was another chart we looked at a few times earlier, which is staying invested versus selling at a new all-time high and buying back when it goes down 5%, buying back when it goes down 10%, buying back when it goes down 20%, right? Come on, I'll sell it now and it'll fall 5%, I'll buy it back. Right? Doesn't happen much. It doesn't work out. Looks great in theory, but the market is not theory, right? So it doesn't work out. So I don't want to try anything different. I just want to stay with what has been working out throughout ages, right? Focus on what I can control. If I have a 10 to 20 year horizon, then most of the times markets have returned positive. Right? And we've gone through much bigger problems than the tariffs. Tariffs is a self-inflicted, and we already know what the solution will be. We've gone through COVID, we've gone through much bigger geopolitical risks and all that stuff in over the years of the stock market history. And still, starting from 1926 till 2022, 10 year, 97% of the time you'll make money. Right? Hold for 20 years, so whatever money you have right now, looking at the history of the stock market, you never lost money if you held your stocks for 20 years. So the concern would be if you have a time horizon for 1 year, right? So, and I think we talked many times the stuff which is 1 year out of a three, markets will return negative. Every year, like 5% to 10% drawdown in any given year is pretty common in the market. If you're a day trader, then a 50-50 chance of making money, right? So if I have a 5 year holding period, what's there to worry about? All we need to do is to make sure we are Today we can just rebalance it, diversify it, or maybe add some of the quality investments because now they are at better prices than when they were in February. That's not to say that they can't be available at a cheaper prices, but you don't know. At some point of a time, you have to pull the plug. And if you have been waiting and not investing, do your regular investing, maybe this was giving a better chance than what you had a month ago or 2 months ago. That's all we can do. I can't predict the market. I don't think anyone can predict the market. I can only focus on which stocks I own, what kind of a portfolio I own, and how I stay through this volatility period. Uh, The this famous saying, right? Most money is made in bear markets, just that you don't know about it yet. Is the stocks that you buy at the cheaper prices when everyone is selling it off, those are the one on which you make your most money. But you don't. It is not easy. So don't get me wrong. I'm not trying to trivialize the current volatility. It's never easy to buy when everyone is selling, but you make most money on those because you find some great deals on some good companies that you have been eyeing. Maybe buy them now. Anyway, so I think this basically shows up 100% US stocks. So this was SPY returns. Right now, this one from Morningstar has got both 100% US stocks and then 65% stock, 35% bonds, right? Whatever, 60-40, 65-30. So, yeah, 10-year period, 94%, 95-year, 90% of the time you're going to make money. So, yeah, no reason for me to sell off. Of course, if I have money that I need for next month, and that should not be in the stock market to start with anyway. Right? So if you go back and look at the recordings of those initial investing 101 that I did with you guys, right? Minimum 3 years. If you need anything before 3 years, don't put it in the market. And this is the reason why I said that minimum 3 years shouldn't be in the market if you need it for 3 years in the stock market. Be in a fixed instruments. Okay. All right, so 1 week performance, not a great. Nvidia 5%, 3% negative, except the tech. I think all other were still fine. Tech and consumer discretionary, which is basically Tesla. Tesla has its own individual problems. And then the big healthcare scares came from United Health. Other than that, market was still okay. Right? Gold continues to make a new record high. It's up what over 5 years, it's up 100%, and it's hit 306. This is GLD ETF, and all the gold mining stocks were ripping. So I just got a list of some of the biggest market cap gold miners on US exchanges and how much is their year to date performance. Newmont is $64 billion, up 50%. Right. 70% Agnico Eagles. This is Hong Kong based, 65%. Wheat and precious material, 46%. So anything that gold touches turns into gold, which basically all the miners, etc. They have had a wonderful, wonderful performance. And I think a lot of this performance of gold has to do with 2023 and 2024. Over these 2 years, we saw gold. I think probably gold has performed better than SPY. Right? Gold didn't do anything for almost 10 years. I think from 2012 to 2022. Oh, let's go back 20 year. No, okay, let's change the time frame to be Weekly. This is what, 2011, 2012, right? This is 2011. This is September 5th, 2011. All the way till here, this is 2020. And then let's say come back out here. So yeah, so almost for 10, 12 years, gold did nothing. And it's only in the last 2 years, maybe I should say last 1.5 years, this gold has ripped higher. I'm not chasing this. Gold works out when there is a very, global level uncertainty, which is what now we are seeing it. So I'm not surprised that gold has ripped so higher. But yeah, and so is the all the gold mining stocks. So if you were owning some of these gold miners and you did not sell off over the last 10 years when you didn't get any return, 10, 12 years, yeah, your portfolio is doing great right now. I still own, I think sold some of my positions around 200 or something. And then I still have my last portion of GLD, which I still hold. Right. Again, I had no idea what's gold gonna do. It's just that I always had some GLD in a portfolio, and then at around 200 something, it got called away. I sold half of them, holding, sitting with the rest half. It works once in a while, like it has worked now. So that's on gold. Sector wise, no change, I think, from what we have seen over the last few weeks, ever since the whole tariff uncertainty started to come in. Investors will rush to the defensive sector, which is staples, utilities, healthcare, right? And those are the consumer staple and the utilities are the best performing sectors so far. Consumer staple is actually up almost 6%, given the fact that the S&P is down negative 10%, and that's like a 16 percentage alpha for buying a toothpaste companies, right? Or Campbell Foods. Because whatever may happen, you will cut down on buying or eating out. You will cut down on your vacation trips. You will cut down on buying a new car. Maybe get a used one, but I still have to eat. I still have to shave. I still have to brush my teeth. So consumer staples, is a defensive sector. Utilities, you still need, your lights and water. You'll pay for that. You probably I'll probably not buy Pellegrino, but I still need a tap water, right? So utilities still fine. But again, these are, if the narrative flips, money is gonna flow back into the sectors which are generally growth sectors. These are just the market cycles that happens. Fear and greed index, still in extreme fear. um, Over the last 3 weeks, from 4 to 13 to 21, slowly, either the market is getting used to it, right? So earlier it was a shock. What the heck is going to happen? What is this guy doing? Now we kind of got used to it. I don't think situation has changed a lot, except that now of course, we got a 90-day pause. So maybe after 90 days, we'll see what happens here. But generally, this has been a good indicator of being, so basically, be greedy when others are in extreme fear and be cautious when others move into greed. That's how I use this indicator. Right? There was another one that I saw, I think, somewhere on Twitter, on American Association of Individual Investor, AAII. So they also do a weekly survey of their members. And if I recall correctly, for the sixth consecutive week, 97 percentile is bearish on the market. Something, some stats similar to that, some 97% bearish sentiment for sixth consecutive week. And the fund manager that had posted that this chart on Twitter said that this is the worst that has ever seen in the history of stock market. Worse sentiment than 2008 crisis, worse than what happened in COVID, worse than what was in dot-com. Is the situation really that bad? I don't know. Sometimes these indicators could be you know you use it as a counter indicators. So when the rest of the market is so fearful, maybe that's the time for us to become greedy. It is not easy, but we have to train ourselves for this, because that's where we get the bargains. Let me see some comments before I move forward. The problem is which stock to sell for reason versus the market swing. Yeah, and that is why I am bad at selling the stocks, because one thing which I've realized is if I go back and look at my portfolio, you know, even if the stocks that have gone down 90%, they're not making huge difference in the portfolio, because the stocks that I held and have gone up have largely compensated for the stocks that have gone down. So that's why my portfolio, I mean, uh, I cleaned up a lot, but I still, some of the companies which are down now 80%, like, who cares? I have seen personally that I have more regrets on selling the stocks early, which then became multi-bagger. I don't have regrets on holding the stock which had gone down 90%. They like became, of course, I hold a diversified portfolio, right? If I hold only two stocks and those two have gone down 90%, I will have a huge issue. But I do have some stocks which are down 80%, 90%. But they're like, yeah, largely been compensated by the stocks which I held, which are up much more than that. So yeah, I have also have a difficulty in selling the stock. There are some cases when I will decide, which I have now actively started to do, saying I don't understand the business. I'll sell a covered call, 30 delta, 40 delta, and if it gets called away, that's fine. Me and going trying to sell the stocks because problem, I'll sell a covered call, let it be called away, right? So, but yeah, you need to figure out, are you selling the stock because you don't like the business, or you can't follow the company anymore, or the company's thesis has changed? These are one of a few reasons to sell the stock. Market swing is never a reason to sell the stock for me personally. Like we talked about many reasons of divorcing a stock. That the market, the stock price has gone down is not one of the reasons. There are many other reasons to sell the stock. James says, what if you need dollar in 5 years? Do you sell now? I'm not selling. Right? But then you have to make sure that whatever you have, you still be able to sustain for the next 5 years. 5 years it's a long period of time. I don't think this we will over the next 5 years we'll have time when the market will be higher than where it is today. Right? We will get that opportunities. Asif said, regret never getting into Netflix. And I regret that I had Netflix and I then sold it. and and imagine if I held that Netflix, it would have compensated for some of the other losers that I hold. And which is what I was saying, that I have a more regrets on selling the some of the multi-baggers too early. And for the fear of, oh my God, oh, this is stock is going on, maybe I'll buy it later, or whatever the reason is, right? Then it gets out of your mind and you never get back into it. Now another one is Oracle. Right? Oracle, we talked about it in one of these sessions, maybe in 2021 or maybe 2020. The stock was at $40, $50, and I had recently opened a Robinhood account because you guys, not you guys, but those who were attending that point of time. I just some of you were there. You were like Robinhood investors, and then I had no way to guide you in terms of how to do options. So I opened a Robinhood account, and very few selected stocks I moved over there so that I get familiar with the platform. And Oracle was one of them. And then after the whole 2022, when the drawdown came, all the so-called degen investors, they left the scene. And I am like, I don't do anything in the Robinhood. Let me almost, take out all everything which I had. So I had an Oracle there and I sold it. I said, I'll buy to my regular platform. And I forgot about it. Maybe I sold it at 55, 60. I bought it at 40. My intention was not that it's a bad company. It was like I just wanted to clean up that portfolio. And I was $0 in Robinhood account and I could never get back to it. And now if I look at Oracle, I'm like, dude, should have never done it. Oracle is where what? 128. It has come down from 200. Maybe I look at it again. But I have more regrets on selling out some stocks and never been able to get back into it. Sometimes it's just because I don't see it in a platform and forget about it. What does this mean? Hong Kong to enter US without tax, slapping 120% tariff. Um, I don't know, maybe related to de minimis, which is $800. Asif saying, with such long cycles for GLD, probably better to buy it DCA once a year, maybe on a birthday. Yeah. I mean, GLD is only a small portion of portfolio. I'm not huge fan of owning a big on GLD, and of course now I also call it diversified or whatever into the digital gold, right? So I'm like, okay, I between the digital gold and the real gold ETF on real gold, I need to make sure I have something, some percentage in my portfolio. A 4 months red in the market is extremely rare. Last time it was two in 2011. Wow, I did not know this. I not looked at month to month. What's the stats? Wow, 2011. TC 2018 indicator. All pointers to short-term reversals in the markets. Maybe. TK, yes, I do have some regret on Palantir. Started at 20, sold at 40 and 50. Still happy as it boosted my portfolio in few months. I still hold Palantir. I sold 50% of it because I think once it starts after 45, I think my first sale was at 45, then 65, then 70. Maybe in between something. I think max was maybe 75 or something. But too extremely overvalued. But I still owned some of it after I implemented. I think over the last 2 years, I implemented my own version of coffee can portfolio, which means come what may, I'll not sell some stocks which I put in my coffee can. It's like, uh, you know, you have the stocks, you write on the name, put it in a coffee can and bury it somewhere, which I forgot about it. So I still hold my coffee can shares in Palantir. Others I've sold. I have a covered calls on it right now, just to harness the premium. Premium is amazing in Palantir, right? So I think I have two strangles on it already. So yeah, I guess if it goes to 100 plus without any change in business, maybe I'll sell a little bit. But other than that, I'll hold it. But it's okay, right? I mean, I bought it at $6, $7, all the way to $12, and I think $16 in this cycle. Initial cycle was $26 when Palantir came out public in 2021, I guess. So overall cost basis is very low. Anyway, I recently bought Netflix 805, 865. That after the recent results, well, that looks great, right? It's up what 25%. Netflix is above 1,000, I guess. If you bought it close to 800, it's up 25%. TK, toughest part investing sit on cash when you have cash and no investing, even though all brokers are giving 4%, still tough to sit on cash. Yeah, tell me. Yeah, it is tough. It is tough. But cash is like an oxygen. You never realize it until you really need it. So this is what, and not just individual investor. I think the same applies to companies also. When the time turns bad, then we will realize the value of oxygen. So cash is similar to that. We don't realize the value of it until we really, really need it and it's not available. Normally, I'll keep 10% on any quality stock. Somehow, Palantir exited all at 55. Thought to acquire via cash secured put. Not tough to get at 70 also, but possibility is there. Yeah. So I think I have a 70, 100 cover call for May, and I think I have a straddle. Palantir, maybe some other time I'll tell you the story of in order to defend a covered call, I sold a put against it. Now I was trying to defend a put. Now I'm trying to defend a cover. The stock is so volatile. It's fun to continue to get a premium, but it sucks a lot of energy out of you. So, but it's a decent premium stock. All right, crypto held its worth over this downturn. Hold on. So Bitcoin is close to 85. This is as of yesterday night. It could be anywhere now. So let's see. Yeah, close to 85. Despite one bad stuff that happened in crypto was one of project which was more related to the converting, basically tokenizing the real world assets. That got so-called rug pulled. I only got to hear about it in, I think, one of the podcasts. I'm like, what the heck is that project? And then I realized this was being talked about, or maybe it was being pumped up in social media, and then it lost its 90% of its value in over a few hours. And I think again, we don't know. Was that a rug pull that the founder says that they have not done it, but some other degen trader has pulled the plug? I don't even know what the issue is. But be careful. If you're in this space, there are a lot of bad players. 99% of the projects will just go to zero. So it's not for everyone. But I don't go to Vegas, so this is my Vegas place, right? So far doing good. Especially, I think Bitcoin held up. First time I have seen that when Bitcoin has actually traded not as a high beta tech stock, right? Ever since its founding, we have seen Bitcoin trading as a high beta tech stock. Means if the Nasdaq is down, Nasdaq is down 1%, Bitcoin will be down 2% or whatever, right? And when the Nasdaq is higher, Bitcoin will be higher at more than the Nasdaq. Except, and we talked about last week also, except when these tariffs were announced, Nasdaq sold off, S&P sold off, Bitcoin held it. So I don't know. Is it really will live up to the promise of uh, providing stability when everyone, we don't even know when you don't have a faith on how your government is working out? I think just one instance is too early to conclude, but it does give some credence to those who have been talking about this feature of Bitcoin is when there is a loss of faith in a government, this is the asset class which will play out then. Rest we will see. So buys and sells this week did nothing. I think this is what my last buy and sell of a stock was just after the tariff stuff. I was looking back, I mean, last week also I shared, didn't buy anything, didn't sell anything. Even this week also didn't buy anything, didn't sell anything. So I'm still holding the the puts that got assigned to me on SPY, and we're just selling call against it. Shares hasn't been get called away, so I'll still hold them. Again, this is not a recommendation. I just want to be transparent in terms of what stock I bought and sold. Some of you are new. Every week, if I bought and sold some stock, whether I intentionally bought some stocks or if I got a put assigned to it, or if I sold a stock or I got a short call assigned, covered call assigned to it, I'll come and tell you. But don't go and buy or sell those one. I just want to be a little transparent on, what I hold. Cool. So let's talk about earnings. There are earnings coming up. Hopefully, I'm hoping that we have a more discussion around earnings in the financial media other than just the tariffs. The big one that is coming out next week is Tesla. So I will be watching Tesla, and that's on Tuesday after close. Hold on. What else? Then Boeing. I'll look at Boeing. Then what else I have? Intel and Google. Sorry, I was looking at the board. I actually put earnings season. I'll put on a board in terms of every day and before market open, after market close. What are the companies that I will go and review the results? I was looking at a board. What all I added? Yeah. So these are good to see that we're back on the earnings season. More important will be we'll get to hear from. I don't think anything that the companies are done in Q1 matter. All that matter would be what is CEO talking about Q2 overall 2025. What's their outlook or guidance around tariff? How are they gonna, manage in this situation? It will be all about future. Whatever has happened in Q1, I don't think market will even care about that one. So we had two companies that went through that reported earnings this week. I'll go through those reviews. TK says chances expect going up another 5% before major earnings in May, at least temporary spike. I don't know. TK, I have no idea. But one thing which I've seen over the last 2 weeks is any positive news, the markets rip higher. So I can't just go extremely short on the markets. I do have short calls, but I can't be too negative delta on my portfolio. Uh, which was the date I forgot? Was it 9th of April? Wherein SPY was up almost 9.5%, and QQQ was up 12.5%, right? So that 9.5% was the second best day since 2008. Right? I think that was a day when the 90-day pause was announced, I guess. We looked at that last week. So if there is any positive news in the market, I guess the markets will rip. But is it going to be another 5%? Who knows? So that is why, I'm not going too short on the market right now. We may get a positive news. Who knows? I don't have any insight, but I want to be prepared in case if we do get it, I want to take advantage of it. Oh, so April 9th was the day. All right. How about a couple of earnings? Let's look at TSMC. TSMC. All right. Okay. So TSMC, for those who don't know about the company, a quick couple of minutes introduction. TSMC is Taiwan Semiconductor Manufacturing Company. Even though consumers don't directly deal with it, but indirectly every day, every minute of our life depend on TSMC. This is a company that manufactures chips. It's the biggest manufacturer of chips in the world, considers equivalent to Intel, just that it doesn't design the chips. Intel does both designing the chips as well as manufacturing the chips. TSMC only manufactures it for everyone else in the world. So biggest customers of TSMC are all the names that you have heard and you're familiar with. Nvidia doesn't manufacture the chips, they design it. All chips are manufactured by TSMC. Same case with the Apple, the hyperscalers, they all get the chips designed by TSMC. There are very few players in the big chip manufacturing business. TSMC is the biggest one. Samsung is there. Global Foundries is there. Even AMD gets the chips. AMD still designs the chips. They get it manufactured by Global Foundries and I guess TSMC. These are the three, and of course the fourth one is Intel. Intel, so till date, only designs and manufactures the chips for its own stuff. But with the new CEO, they are planning to, you know, move, separate out the business in which they will also manufacture the chips for others. But some says that Intel has already lost the race to TSMC. 65% or maybe a little more of all the chips in the world are manufactured by TSMC. So if TSMC is not there, I can't talk to you on Zoom. My cell phones won't work. The cars won't work. Anything that's got a chip won't work. 80 or 90% of the high-end chips, which are considered as 7 nanometer and less, which are the latest iPhones, all the latest AI chips, nine. I, I think the previous quarter number was maybe 90%, maybe 85, well, a huge percent, right? Are all manufactured by TSMC. So this is the most important company in the world that consumers don't know about. Right? So what did they see? They said, we have not seen any changes in our customer behavior so far. Right? So majority of their customers are these Apples and these cloud providers, right? High performance computing infrastructure providers. So the business still growing. Revenue grew 41%. We talk about all these tariffs and all that. TSMC will be impacted by tariffs, and that is why they started building the plants in US. I'll give you a rundown on where they are. But the revenue increased almost 42% year over year. Gross profit is up 56%. Gross margin is 60% gross margin, close to 60%, 58.79. It's a manufacturing firm. This is what excites me about TSMC is being a manufacturing company, they're still able to get gross margins of, operating margins of 48%. This is huge for any manufacturing company. I've seen these operating margins of 45% in a company like Microsoft, but you don't have, Microsoft doesn't have, I mean, it does have a small hardware business, but largely it is a software business. So TSMC, on the other hand, is giving us a software-like margins in the business, which is largely manufacturing business. Right? Net income is up 60%. All these are Taiwanese dollars, right? $360 billion. Operating cash flow is up $625 billion. EPS is up 670 Taiwanese dollar, up 60%. So overall, still continue to do good. The stock, however, over the past few months have been hammered because of all these tariff talks. Right? So see, one day if you look at overall, we're looking at a drawdown. Now it's actually 32%. It's at a 32% drawdown currently, sitting at 32% drawdown. And of course, a lot of these, it is currently, I think it's huge dependency on all the purchases that these hyperscalers are doing. So that whole AI is a good tailwind. Anytime you see a crack in the AI, along with other hyperscalers, TSMC will get sold off, right? This is the whole semiconductor a chain, the value chain. You will see all the players in the semiconductor value chain will get sold off. So, but from a company perspective, I think still a good company to own. And I don't think we will not need, we will, I don't think we'll need fewer chips in future. We will continue to need more and more chips and probably more and more powerful chips. Right? It also pays dividend. It announced $4.50 new Taiwanese dollar dividend. But what got me little thinking was the dividend X date and the record date and the distribution date is like so far away. Come on, this is like Q4 2024. The dividend that is for Q4 2024 will actually, you will see in your portfolio like 6 months later. Right? No share repurchase. Looking at how much of revenue come from a different type of technology, this is a breakup for them. So again, the high-end tech, which is 7 nanometer and less, 7 nanometer 15, 36 makes it 51, and 73% of their revenue is coming from, three-fourths of their revenue is coming from the high-end chips. Right? And who are buying these chips? 60% of this being bought by these high performance computing platforms, basically the cloud providers, and then 28% is from a smartphone. Right? And I was looking at a previous quarter, which was 53% for HPC. So it means these cloud providers, despite all the concerns around maybe DeepSeek is there, so we don't need these high-end chips, etc. The cloud providers still, or the high, they still continue to buy the chips. In fact, the share has increased from 53 to 59%. Right? So that demand is still strong. And what they also mentioned was that they are, maybe we'll get to their guidance, so it will be clear. Overall, if I look at the trend, right, they've been growing their revenue 20% at 3-year CAGR. And gross profit 22%, operating income 22%. So close to, oh, I didn't realize it. Now I'm looking at it. Net income 20%, operating cash flow 20%, EPS 21%. So over the last 3 years, every metric is nicely growing at a 20% clip. Right? Year over year, it's of course a higher number because of the demand in AI. But if you extend it beyond, the recent year, go look at 3-year CAGR, it's a decent 20% growing business and generating 20% growth in EPS also. Their guidance, they're still guiding to 38% increase year over year for Q2. So almost 40%, right? Still close to 40% increase. And gross margin will be 57 to 59%. Now, what they're saying is lower by 0.2% because the Arizona fab will start to produce chips. Now, the output of the Arizona fab will start to kick in, and any chips that they're producing in US, or let me say any chip that they're producing outside of Taiwan is more expensive. It costs them more, and it will hit their gross margins. They had already told maybe last quarter or quarter before that, that once all these fabs in US, in Germany, in Japan, once they are operational, they're looking between 2 to 3% hit on their gross profit margin, right? So now we start to see as and when one of the fabs start to kick in, you will see the gross margin might decrease a bit. But I would still say, even with that decrease, this guidance of midpoint 58% gross margin is pretty good. Operating profit margins again to 48%. Capital budget still the same. They are not reduced how much they're gonna spend on building on their capex. Right. Full year guidance, they're still, we're saying close to mid-20s. And this is the same guidance that they gave last quarter. So all the tariff stuff, they're saying we're still maintaining our guidance. And I can assume because these contracts are not the ones that you can change it every quarter to quarter. You might have to, if you want your chips, you might have to tell TSMC a year in advance so that the TSMC can then reserve a capacity for you and give the chips to you. So I guess 2025 is already, whatever tariff at sector will happen, it will happen. But I think that that is already locked and loaded in terms of their growth in revenue. Right. A long term, they're saying 2024 to 29, 20% revenue CAGR. Oh, in fact, we saw for last 3 years, it is 20%. Gross margin will be 53%, return on equity to be 25%, right? So pretty good outlook from a management perspective. What else did I see? They're expanding their investment in US to $165 billion. Again, building some more fabs in here. Gross margin slightly lower because they had an earthquake impact as well as overseas dilution. Kumamoto, this is a fab in Japan that is start become operational, and they talked about the hundred and how they're gonna spend in $165 billion. I'll skip that. This is more important. There was a question around what do you think would happen to TSMC if China invades Taiwan, right? So Asi said that's a bargaining chip. And this is why US also want to isolate itself from that threat to have TSMC build plants in US. So as of Q4, when I reviewed in Q4, they are only talking about 3 fabs. Now, this quarter, I'm looking at, they're talking about Fab 4, Fab 5, and Fab 6. And they're adding 2 new packaging facilities. So, and that's where the $165 billion will go, I guess. Right? So US is trying to isolate itself from the risk of CCP, taking over Taiwan or attacking Taiwan to make sure at least internally we have a capacity here to produce those chips. Now, still, I think the most high-end chips are still being produced in Taiwan as of now, but I think that's Fab 2, which will have 3 nanometer, and I think Fab 3 probably will have a 2 nanometer chips, and then that's called A16. These are the latest ones, which already are starting work on these ones. They have a budget for another one. They'll start it based on what the customer demand is. So we are trying to de-risk that one, but I guess even whenever CCP or if CCP decides to invade Taiwan, the only one reason why the rest of the world will come to the support of Taiwan is because Taiwan has TSMC. And the rest of the world, everyone needs chips. Right? So that's one I guess a factor that Taiwan has, that the other countries in the world will help them not to be taken over by CCP. And of course, they continue to do their investment in Taiwan as well. So that's all around TSMC. Despite all what's been seeing in the stock, I think it's still a good company. Right? Growing at 20%. And I think in future, our demand for chips will continue to grow. Only other thing is we might see Intel coming as a competitor because US government might nudge some US companies to buy from Intel. Right? Things happen, we are not completely immune from government interference. So might nudge buy American, means buy, so at least we'll have an Intel which will also be in the game. Otherwise, I mean, this is TSMC's game to lose. And I like their management. They are shareholder friendly, and they don't spend money where it's not to be spent. So I will still be the owner of the shares. I do own these shares, and I plan to hold it for a long time because I don't think we'll not need chips. We'll probably need more and more chips. Now we're talking about humanoids. We're talking about Elon Musk is saying what 10 million humanoids. How are they going to operate? They all will need chips, right? And that has to be come from one of these. There are very few players, and TSMC is the biggest player. Stock could stay volatile based on what's happening in the market, but who cares about what happened to the stock in this quarter or the next? Saying in May 2020, TSMC shared its plans to invest 12 billion in Arizona. That's when you started investing. Yeah, I mean, that's a pretty good time. I think I'll have to go and see when did I invest in TSMC. So that's on TSMC. Any questions? Asif, you know more about this industry than I guess anyone in our group. You work in this industry. So you correct me if I'm saying anything wrong.
Yeah, not really in the chip manufacturing. I'm on the software side. So, but I have friends in the chip industry a lot, so I just get a brain dump from them every quarter.
I mean, okay, you are maybe 10 miles away. I'm 100 miles away from this industry. I have no idea. I'm only idea I have is as an investor and I've worked in chip industry. All right. The second company that reported results again related to the semiconductor is ASML. And I would say, like TSMC, this is the most important company that you've never heard of. ASML makes the machines that TSMC buy to make the chips. So if ASML does not make the machines, then TSMC cannot make the chips. Right. So again, they report this is company which is based in Netherlands. Again, those who are new, quick 2 minutes rundown on the company. So, to make the chips, you need to on the chip wafers, you need to etch the patterns on it, and to etch those patterns, you need machines which are called lithography machines. Now, why ASML is interested to me is the chips which are like 7 nanometer, 5 nanometer, 3 nanometer, 2 nanometer, and now they're talking of like 1 nanometer chips. Right? To make those chips, you need extreme ultraviolet lithography machines, which only one company makes in the world, which is ASML. So if you want these high-end chips, currently TSMC cannot make the chips if they don't buy the machines from ASML. Each of these machines will cost anywhere between 300 to 500 million dollars. One machine costs gigantic amount of money. It is shipped in a separate parts in 3 or 4 jumbo jets and then get it assembled at a customer place. Right. So they have a complete monopoly on this. There is no other company that makes it. Earlier, Canon, Nikon, they were into the same trying to perfect the technology, but everyone gave up. ASML engineers did not give up. They spent 17 years trying to build this tech and were only successful to build EUV and have it commercial production, maybe I think 2017 or something. Right? And now they're moving to the higher, better versions of EUV. So that's what makes it more interesting. Of course, there were other machines for making other chips also, which is called DUV, deep ultraviolet lithography machines, etc. US government has put export restrictions, and because Netherlands is ally of US, Netherlands has also told ASML to not sell their EUV machines to China. So that's a big blow to ASML as a company, because earlier almost 40% of the revenue was coming from China. Now they are still allowed to sell the lower quality, not quality, but the lower end DUV machines, but they cannot sell the state of the art EUV machines. And if China really want to make the chips which are as powerful what we are using for AI, etc., you need those EUV machines. There are at some other time we can talk about the other competing technologies that are coming up, which may reduce the moat of this company. But I guess Any new technology in this space is going to take at least 10 years before it become productionized, before the customers start to adopt it. These cycles in this industry, especially in the lithography industry, etc., they run like 15, 20 years long cycle. ASML is already planning for the machines that they're gonna build and create and deliver, 5, 7 years down the line. Right? So with that background, let's look at the revenue. Revenue is up 46%, gross profit of 55%. There is nothing that I don't like it. Operating income is, that's something we had 96%. Uh, Net income is up 92%. Cash flow is great. Everything looks great. Um, this is more important. Net bookings is basically what they're seeing in future. So what this will be a future revenue, give you insight into what the future revenue could be. They're looking at a bookings of 3.9 billion, out of which 1.2 billion is EUV. Net system sales were 5.7 billion euros, which is 3.2 billion from EUV and 2.5 billion from non-EUV. So majority of revenue is coming from those high-end chips. Plus, those machines that they ship to their customers, those machines have a life for 20, 30 years. And they will need continuously management. And those are very, very complex machines. And then they continue to basically, they have another source of revenue, which they call installed base management. Go repair it, service contracts. You may want to upgrade that machine. All that comes under installed base stuff. And that is close to 2 billion euros, right? So even if China doesn't get their latest EUV, they still have revenue coming from the install base management. They shipped their fifth high-end A system. This is their latest model of their machines. I think each of the machines list price are almost $400 million. They shipped their fifth machine. I know the first one, they shipped it to Intel. I guess the other one now is gone to Samsung and SK Hynix. Right? So there were three customers where they're shipping this machine. I think Intel got the second one also, because Intel got the first one and they were testing it. And now I think what they've reported is Intel has give them a thumbs up that your machines are good. Looks like Samsung reported 60% improvement cycle in one of their use case. So machines still be performing well. Now this is more important. Customer interaction suggests that 2025 and 2026 will be growth years. So they still see, and this is what they've been maintaining over the last two years. They already guided saying 2024 is going to be a stagnant year. And that's what the stock, I think, didn't do, or the revenue growth wasn't much on 2024 because they already guided saying a lot of these Chinese customers that pre-ordered and pulled their purchases ahead because this whole export restrictions, like before tariff, we had all this export restrictions discussion that have been going around for some time. And Chinese customers were concerned that once the US put those export restrictions, they will not be able to buy the machines. So they pulled in their orders in 2023, and 2023 growth was good. And then management mentioned that 2024 probably we're going to be a flat year because we pulled ahead the growth in 2023. But we'll come back to the growth in 2025 and 2026. That's what they reiterated, saying, I guess this will still be a growth year, but now this whole tariff stuff is that we have an uncertainty. So we don't know what might happen, but so far looks to be good. So what's their outlook? They're looking at for net sales between 7.2 to $7.7 billion. And full year, they're still looking at $30 to $35 billion. Right. They also pay dividend. They paid dividend of total 2024, almost 6 euro as a dividend. So if you own the stock, you also get a dividend every quarter or 2 quarters. And they did a share repurchase of $2.7 billion worth of shares. So last quarter, when we reviewed it, I think I did put a note saying they have so much of a cash. They didn't buy anything in the Q4. And I'm like, maybe I'll expect them to buy something in Q1. And they did. So they didn't buy anything for last 2 quarters. And now eventually they did buy, which is good. I don't want my companies to buy when the shares are here. Buy it when the shares are here. Right? Which turned out to be a better decision to not buy the stock when it was the most expensive one, but to hold it and buy it when you can get cheaper in the market. So overall revenue trend still fine. Like 3 year CAGR, if I look at 30% revenue, gross profit of 34%, operating income is up 52%. I mean, there's nothing to complain. And so far, their mode has not been challenged. So I guess I'll still hold it. Now, the stock was down 7%. It was because the guidance was lower than what the market was expecting. Market was expecting $7.75 billion, and they guided to max of 7.7. Means if you take a midpoint of this, that would be $7.45 billion. So market sold the stock by 7%. Well, who cares? I think still a great company, uh, uh, a very wide moat around its business. And if we think we need more chips, we need the machines that make the chips. And these machines are supplied by ASML and no one else. However, this whole geopolitical stuff is a little concerning. I think the dependency on China has reduced a bit. Sometimes it used to be 40% of the revenue. Now the China is, I guess, mid 20% of the revenue, right? So, but still, 20% still high. Now, I don't have a breakup of course, there are no EUVs. So I guess everything is what they have is the other machines, which you can make not the latest chips, but you can make the older ones. Now, there are a few things which I've noticed, which could, over maybe a few years, could, put a crack in their mode. There are a few technologies. I just want to give you a quick rundown of that one. One is, I think Canon, was it Canon or Nike? Oh, no, not Nike, but Nikon. One of them. Hold on, maybe I have a note somewhere. Let me go and see where I put it. One of companies is coming up with a stamping technology that won't need EUV, right? One sec. Tech threads. Canon, right? So they're coming with a new tech which is called stamping tech that probably won't need EUV. But again, what they are the Canon was finding a lot of impurities getting into it because of the stamping stuff. When you're touching to stuff, it's it's highly likely you'll bring in some particle which is not supposed to be there. And then they'll also have to build their whole ecosystem supply chain. But something to watch out for. Second thing was around this came in this week or the last week. One of the Chinese newspaper, I think South China Morning Post, which was around how some of the companies in China, they're actually looking at 2D chipsets to create the chips which are equally performant as, let's say, these high-end chips are. And the reason is because China can't get access to EUV. Now they're figuring out how do we get the same performance without creating these machines. So fabrication of this chip does not rely on the EUV. So that will make China independent, right? This is the first. I mean, this is right now in an R&D stage. This chip is less than 1 nanometer thick. So could next 10, 15 years from once it's out of R&D, could this be a challenge? Who knows? But I guess this will be another 1 or 2 decades. The third one, which I don't have it here, is I think I read it somewhere, which is called offset um, called not printing, but basically offset. Well, let me use the word so that I'll not forget about it later. Printing of patterns on the chips. But basically, you use the 7 nanometer chips, and I think this is how some of the Chinese companies, fabrication companies, were able to create the chips that Huawei has used, and everyone was wondering how the heck they created 5 nanometer chips. I guess Huawei phone had 5 nanometer chips, and everyone was wondering how the heck Chinese companies created this because they don't have access to EUV, and which was another method that they use, which is called offsetting. Again, I'm not going to get into details, but the yield, there's so much of an error in this one that it's not a profitable business. But these are the things that I'm watching for to see if it could create a crack in the mode of ASML. But it might be a few years, maybe a decade, or maybe never. Right? Until then, I think ASML has a strong mode. There is no one else who can replace UV for now. Right? So that's on two companies, ASML and TSM. Any questions on this? Or if you know more about the industry, please correct me. I'm just an investor. Okay, okay. So I think already ordered. What's the stock symbols? These are the stock symbol TSM and ASML. Given TSM is low right now, would this be a good time to get some stocks? It's always a good time to get some good stock. Now, I don't know what else you hold in your portfolio, Ruturaj. So you have to see what other AI exposure you may have, right? Again, let's say once this AI, and I don't know if the AI tailwind is no longer there, or we realize that we don't need these all AI chips, all these stocks, TSMC, ASML, NVIDIA, all the stocks will go through correction. Right. But I guess that may happen in 1, 2, 3 years. But when I'm looking at these companies, I'm like, I'm gonna own them for next 20 years. In next 20 years, will we continue to have more demand for more chips? My outlook says yes, because I'm looking at a future where we'll have flying cars, we'll have a robot taxis, I'll have a humanoid who's doing my laundry while I'm doing a session with you. In that world, yes, it's a good price to get in. But year, 2 year down the line, once we realize all this AI is not working out, nobody's making in money in AI, they say we don't want AI chips. Will there be correction in the stock? Sure. But that you have to determine, what the time period you're investing for. All right. So I don't think we'll have a time for going through all the news and charts. Maybe we'll answer some questions, then we'll open the room for a breakout. So those who are new, we what I also started doing from the last week was, because I can only talk about a few things. There are a lot many other things that you may want to talk about it, and there may be people who are better to talk about those. So I have created a few breakout rooms, which I'll open up after this, and we spend 30 minutes going individual breakout. You want to talk about some day trading, there is a breakout room for that. Talk about your day trading signals, talk about VWAP, talk about EMA, SMA, whatever other things you want to do, Bollinger, Fibonacci series, etc. You want to talk about very basics of investing. I'm a Vanguard type of investor. I just do VOO and chill. There's a room for that. You want to talk only options? There's a room for that. So I'll open up the rooms once I answer some questions, and then we're going to talk, and I'll close the room at 12:30. Okay, a meeting will end at 12:30. So make sure you finish your discussions by that time. All right. Let me look at some questions. Which of you folks have a positive return over an investment portfolio over a holding period of 12 months beginning April 1st, 2024? I'm not even tracking at an April 1st, 2024. So I don't know if others are or not. I wonder what prevents Intel from buying these ASML machines and manufacturing them. Something clearly does. Effectively trying to understand TSMC's mode. Number one, it's not this question of manufacturing, it's the question of manufacturing at what price. Number two, the work ethics. Number three, we don't have buying a machine is not it's buying a machine is like it's like a surgeon buying intuitive surgical robot. You will need someone to also operate those machines who understand these well. So I don't think that we even have that capability. I mean, this is where we have lagged the most. We don't have the best engineers from US universities are going to Facebooks of the world. They're not going to the companies, the industrial companies or the manufacturing companies. We don't have that talent. Even if we have a talent, our work ethics and the work ethics of a Chinese or Taiwanese TSM is very different. TSM, so when TSMC, Taiwan had an earthquake, right? TSMC engineers work 24 by 7 on their plants. We don't have that kind of work ethics. Right? You won't question your boss if you have to work for like 6 days and in a conditions that you may not find that conducive work, but those Chinese graduates work. The those Taiwanese employees, they do. The best graduates from Taiwan universities, their most favored employer is TSMC. Tell me how many engineers from our best university consider Intel as their first employer, the preferred employer? I guess none. So buying machines is one thing, but building the whole ecosystem, trying to get the talent, trying to get the same level of work ethics and the dedication to the work and the respect that those Taiwanese engineers earn over there, and hence they contribute similar to the TSMC, is very different. And finally, even if you do all that, it will be more expensive to produce it here. Now, one of the reasons why TSMC is having a little difficult time in producing the high-end chips here, or to start the fabs even faster, they say we don't have a talent. They need to get engineers from Taiwan to come here and run all the plants. We don't have the talent yet. So that's case. So I think that's what I'm not too worried about Intel. I think there's a space for more than one in this world. I think the world would also want to have more than one players. You don't want to be stuck with just TSMC. Even though TSMC they don't do price gouging, they've been very, very decent with their customers. But I guess there's a place for one, but more than one. And Intel will take some time to catch up. Not enough cash flow. I mean, Intel is selling that Altera, right? There was a news they're selling Altera to generate the cash, and they took a huge hit on that. Let's say let's say we solve the money problem. They get a grant on the CHIPS Act and all that stuff. And money is one issue, but that can be solved. You sell the Intel foundry to PE firm, which will put in money. How do you solve the problem of having a talent? How do you solve the problem of work ethics? How do you solve the problem, the other stuff, which is I feel is more important? As if last 15 years, best engineers are optimizing it. Exactly, yeah. Best engineers don't go to Intel anymore, right? Okay, Shri has shared some numbers. 21% for 1 year. I don't track, on April to April, I do look at what was my in 2024 and then what's right now, but I don't track from 1st April there to this. Anyway, so that's all I had today. I mean, we reached our time. There is some other stuff that I could go through, but let me open the breakout rooms and leave you guys to talk to each other, learn from others as well, and all of the topics. So we have a breakout rooms on swing traders, day traders, fundamental investors, options, noob investors, and alternatives. If you are those degens, cryptos, you want to swing something on pump.fun, this is a place for it.